Well, folks, flapjacks are being flipped the wrong way left and right now. The stock market crash is intensifying, and I want to explain exactly kind of what's going on here. You know, in this sort of market, I think we got two groups of folks out there. You got the first group who are pulling their hair out like, why is the stock market going down? The second group is just kind of looking at this from an observation perspective and like, what is going on right now in this market? And let me first say, it's always more than one thing if you're getting a dramatic market like this, okay? It's easiest to try to pin it on one thing and be like, it's just the Fed or just this or that. When really there's a multitude of things going on right now, all simultaneously, and it is making for one of the most volatile markets I've ever seen and throughout our history that we've ever seen. And it's a drama show nonetheless, and there's a lot of reasons for it. So I hope you guys enjoyed today's video because I've spent the last several hours just trying to break all this down and put the pieces together on exactly what's going on here and why things are the way they are right now, okay? So first off, if we're thinking about, one of the reasons why the market went down a lot here today was, if you noticed, Bitcoin crashed over the weekend, okay? In a 72-hour span, Bitcoin has lost $10,000 per Bitcoin. I mean, it was a dramatic move from right before the crash, it was 43,000. And at the lows, right before the stock market opened today, 33,000, okay? $10,000 lost in 72 hours for each Bitcoin you own. Now, the Bitcoin has become a representation. This is very, very important what I'm about to explain. Bitcoin has become a representation to the entire financial system now. And if Bitcoin is flying high, if Bitcoin is going up, it is seen as, oh, investors want to take risk, therefore Bitcoin goes up. And if Bitcoin's falling, especially a $10,000 fall in 72 hours, Bitcoin is seen as investors don't want to take risk, sell stocks, sell anything you got, sell the altcoins, sell everything else because this is no bueno, okay? And so Bitcoin, if we go back 4 years ago, 7 years ago, it wasn't like that. Bitcoin was just some other kind of side thing. But the fact is Bitcoin is so famous now. It is so popular in the financial market. It's one of the very few things that everybody, not everybody might understand Bitcoin on a high level, but everybody knows about Bitcoin. Like, everybody, if you just said Bitcoin, people are like, I know what that is, okay? That's the cryptocurrency thing, okay? And so the fact is, when you have this type of fall over the weekend, people are going to get real jittery, like, oh, okay. Now, this is part of the reason that led to this situation today. In a spasm of panicked selling early Monday, retail investors offloaded a net $1.36 billion worth of stock by noontime. It's on the East Coast time, okay? Most of it in the first hour. Which means essentially retail investors over the weekend were putting in, for whatever reason, okay, sell orders for Monday. Sell everything, sell part of my stocks, sell all my stocks, things like that. Like retail, they were triggered and they were ready to just put it in, sell order after sell order. According to data compiled by JP Morgan Chase strategist Ping Ching, okay, I'm sorry, I'm horrible at pronouncing names, okay, I'm trash, okay, I apologize, I don't know, anyways. By his estimate, share disposals were 3.9 standard deviations heavier than the full day average in the previous 12 months, says this gentleman. That is, I love when you can put actual data together and kind of, paint a picture together of exactly what went on here. Cumulative retail order imbalance for January 24th, 2022, okay? Look at this, okay? That's off the charts. Let's just put it that way. Retail investors said, I'm out, I'm gone, okay? Sell. And that's not normal activity, just to be quite frank. That's not like that, oh, that happens all the time. Like, no, okay, that doesn't happen all the time. That is a freakish situation, let's just put it that way. And this could be blamed on many various things, right? I'm not going to get into all that. Some will blame it on Bitcoin, some will blame it on other stuff. We don't have to go down that rabbit hole. But nonetheless, retail this morning sold in mass. And, unfortunately, when they were selling into basically the lows of the day, too. That's the craziest part of this whole situation, all right? So, And that's next part. Next part up here, okay? This was covered on the Hungry Bowl today. Really good piece put out by the guys, and if you're watching this video, thank you for this, okay? It appears option traders are nowhere to be found right now. Even with stocks at extremely beaten down prices and oversold conditions, it seems these people don't expect it to ease anytime soon. I'm not seeing much along the lines of a quick end to the sell-off, said Chris Murphy, co-head of derivative strategies at the S International Group. It looks pretty fearful. Look at this, okay? This is extraordinary. The number of puts purchased today heavily outweighed the number of calls by a 1.1 to 1 ratio. This is the most bearish ratio that has been seen since March of 2020, which is when the stock market crash ended, essentially. It doesn't mean this is going to end, okay? So I just want to put that out there. Just because this is the most bearish ratio we've seen since March of 2020 doesn't mean this is the end, okay? But it is a reference point. It is important for us to remember the last time the market was this bearish was when the market was literally bottoming out in that stock market crash. There's definitely more severe than anything we've seen pretty close in 2 years, said Randy, Vice President of Trading and Derivatives for Charles Schwab Center of Financial Research. And so right now, you have a situation where retail investors are running for the floodgates and simultaneously going short the market, or dare I say, buying put options left and right. Can also be Wall Street in general buying put options, but, you know, based upon the activity, let's imagine you're a retailer, okay? You're a retail investor. You just sold out of all your stocks or a bunch of your stocks. Well, you're doing that because you're scared, and you're doing that because you're probably bearish on the market. So what's the next thing you're likely to do? Well, we know a lot of the retail crowd doesn't just like to stay in cash, and if they're bearish on the market or scared of the market, what's the next thing to do? Well, shorting seems dangerous because there's, unlimited loss. At least if you buy a put option, the loss is only 100%. Shorting is literally on unlimited loss, right? And some people just don't like the feeling of shorting stocks. Also, you have to pay interest. So a lot of folks just say, you know what? I think the market's going to go down a bunch in the next 60 days. I'm buying put options, okay? And so that's what they do. And nonetheless, you see the most bearish ratio we've seen since March of 2020 in this market, all right? That's pretty darn extraordinary, right? I was out there buying stocks today, but I can tell you, I'm a retail investor at the end of the day, right? It doesn't matter how much money I have. I'm still just a retail investor. So I'm out there buying stocks today, but I'm not so convinced there were that many other retail folks really buying the stocks. The market got bought up today because, in my opinion, big money bought it up, okay? That's what I believe. I believe it was essentially a transfer from retail investors in these stocks, or retail traders, whatever you want to call them, retail, to essentially big money, in my opinion. That's what's going on. I do not think there were many of me's out there today. Let's just put it that way. An actual retail investor actually out there buying. Now, that wasn't going on nonetheless, okay? Now, another reason why why the market's getting really rough right now is there's obviously a big Fed meeting coming up. And Wall Street, in my opinion, wanted to signal to the Fed, hey, you guys, better not do anything. Listen, okay, this is how it goes. Wall Street, the hedge funds, how can they get a message through to the Fed? You're not going to get a message through by talking to them. You're not going to call up Jay Powell and be like, hey, man, watch your language in the Fed meeting. Don't be too aggressive or the market's going to sell off. No. You know what you do? You sell the whole dang market off. And you have one of the, biggest percentage drops in the NASDAQ that we've had in a long time. In a long, long time. That gets the Fed's attention. And you make it one of the most volatile days in the stock market we've seen in a long time. That gets the Fed's attention at the end of the day. There's no way they just didn't pay attention to what happened today. Like, we didn't see what happened there. No. That doesn't happen, okay? 100% they were watching. 100% they're looking at that and they're like, okay, And there's always this debate that's around, well, the Fed's job is to, try to monitor inflation, deflation, those sorts of things, and try to keep, that's not the way it works. The way the Fed's looked at is they're looked at as the ones to try to keep the economy healthy and try to keep the stock market healthy, okay? As much as people don't want to admit it, that's what the Fed does. And so if you see the market selling off heavy, who gets the blame for that, right? Well, one can be the person in office. The other can be the Fed. Those are the two that are looked at first and foremost. If the market drops 20, 30%, who's in office and who's at the Fed? That's who gets blamed immediately, okay? And at the same time, they get credit if things go well, right? And so this was Wall Street clearly sending a signal that, hey guys, Watch yourselves from the Fed, okay, the big Fed meeting. So this big Fed meeting is going on Tuesday, Wednesday, which is making a lot of investors uncertain in this market, where a lot of folks are looking at it and they're like, what's the Fed going to do here? Are they going to announce they're going to raise in March or not raise? And if they do, what is it, a half a point, a quarter point, less than a quarter point, like, or 1%, like, everybody starts thinking all these crazy things. And believe me, I think the message that happened today, I think it was a big enough message Wall Street sent to make the Fed kind of chill back a little bit. I love the game of poker, right? Texas Hold'em. And essentially, if you want to get somebody out of a hand, let's say you feel like somebody doesn't really have that great of a hand, but they are willing to stay around, you got to make your bet big enough to get them out of that hand, to make them say, you know what, I'm going to go ahead and fold this hand. It's not worth me trying to see another card or two here because that bet's too aggressive, right? You got to do enough to make them say, okay, I'm going to back off. And that equivalent happened in the stock market today, in my opinion, where the big guys shook up the market so much that, in my opinion, the Fed kind of has to fold their hand now at this point in time and chill, or they're going to risk losing the whole game, right? And I know, when it comes to Fed, that's not a game they want to win. They want to lose, and then you start getting into politics of things. And believe me, guys, it gets messy. Okay, it gets messy. So that's going on. That's shaking up this market in a major way right now. Okay. Next thing up, there's a Jeremy FOMO meter, I call it. Okay, and essentially this is my gauge on the markets, and it's an informal gauge, but it's like how I see investor activity, because I have really large YouTube channels. Which, by the way, if you're not subscribed to this one, Financial Education 3, what the heck are you doing? Make sure to subscribe to this channel. This is my small channel. Okay, but I have these big channels that get a lot of views, so I'm always reading the comments, getting gauges of investors. I have Discord communities. I have my private stock group. I have all these different things that I can gauge like where the FOMO is at in the market, if there is any FOMO in the market, which is fear of missing out, which is investors are saying, I got to get money in the market, right now, okay? And basically, last year at this time, we were at 100. We were at the highest of FOMO meter I've ever seen, okay? I've never seen a market like that it was so insane. The valuations went to the moon. It didn't matter what the business model was. The more speculative, the more people wanted to invest in it. If it was down 2%, it was like, you better load the boat now. And we were in max FOMO meter. I've never seen it like that in my 14 years of doing this. Essentially, it was insane. Okay, it was the closest thing to the tech bubble we ever had. It didn't quite get to that level, but gosh, it was pretty darn close. Okay, and so that was insane. That was pure insanity. No, you fast forward to the summer of 2021. I feel like we were kind of in the middle. You still had some people that were kind of FOMO, but then you kind of had some people that started to lay off. Right now, let's be very clear. As of recording this video, the night of January 24th, 2022, there's no FOMO in this market right now. 99% of people right now in this market are looking at it and saying, I don't have to buy any stocks. Clearly, there's selling pressure, massive selling pressure that we haven't seen from the retail crowd in a long time. The put option activity is the highest we've seen as a ratio since March of 2020. There's no FOMO in this market, baby. There's no FOMO. This is the complete opposite of a FOMO market you've got out there, okay? The high flyer stocks are down 70+%. Anything seen as speculative is down 70+%. Even great growth stocks are down 50, 60, 70% right now. And so, yeah, there's no FOMO in this market. I can tell you that, right? Now, I saw this on the Hungry Bull, which was quite interesting, okay? This Wall Street legend says we may be witnessing a bubble burst, he says, okay? Grantham believes we're not only in a stocks bubble, but a bonds, real estate, and commodities bubble as well. He says, when it comes to stocks, Grantham recently said, we have the most exuberant, ecstatic, basically even crazy investor behavior in the history of the stock market. The long-term money manager indicated that he's seen the largest adoption of the belief that stocks only go up his entire career, calling the adoption of this idea the real essence of a bubble, he says, okay? Now, to be fair, Grantham's, I would call it bearish most of the time. He's a value investor. He doesn't like growth stocks, and he feels like, valuations are always insane, right? Thing I would say to Grantham is, where the heck have you been? Okay. Say that, 100%, if you're saying this last year at this time, respect, okay? Because at that time everything he's saying there was at that market. How can you say that about this market right now? Unless you haven't been keeping up with it. How can you say that when these stocks are down 50, 60, 70, 80%? In just the past year. And some of these stocks are down like that in just the past few months. You can't say that in this sort of market where everything's just been absolutely decimated. You're basically banking that things will get even worse, which is definitely a possibility, but to act like, we're in some, massive bubble right now, no. Last year at this time, yes. This year at this time, no. The Russell's down in the past year. The NASDAQ is gotten destroyed so far this year and could even get destroyed more. And we're in this situation where, it's just everything's been absolutely devastated. So, I think it's hard to say something like that now. I think, if he was, more in the real world, I think he would realize, oh man, the bubble has been bursting for a year now, right? This is interesting here. Markets haven't acted like this. This was in the newsletter from today, okay? On the Hungry Bull. Markets haven't acted like this since 2008. Stocks have been getting hit in the market pretty brutally, especially given the fact that each major average has had its worst week in over a year just last week. But the markets rallied into the close by the end of today's session, obviously, to finish green. In fact, today was the first day since the aftermath of 2008 that the NASDAQ was able to stage an intraday comeback after being down over 4%. No, that's interesting. First off, is everybody convinced like we're out of the clear there? No, okay? I don't think anybody's convinced like today was the bottom. When you're in this sort of market where it just gets more vicious and stocks reach new 52-week low after new 52-week low, no one wants to call a bottom right here. Even after that massive intraday move, right? Which essentially, if you're interested, this is the largest intraday percentage turnovers in the history of the NASDAQ. And we had one in 2008, October 10th, 2008. And here we had one today, January 24th, 2022, which was it's just a crazy move. We went from down about 5% to finish the day about 0.6% green. You had another one of those moves in 2008, and you had another one of those moves in 2008. So keep in mind, guys, you had 3 of these moves in 2008, and this is another thing that people look at. So you get so much conflicting data right now, so much conflicting data where it's like end of the world, and then you get some hope. And then it's like end of the world, and you get some hope, and that's what's making this market so volatile right now. But folks are looking at this and saying, okay, wait a minute. We just had the largest intraday, or the second largest intraday change ever, and 3 of the other top 8 came in 2008. Oh, 2008 was during the Great Recession. Are we in a 2008, 2009 scenario right now? We just don't realize it, right? And so that's one of these conflicting things you look at, and it's like, oh my gosh. And so nonetheless, this market is going to remain very, very volatile. By the way, if you want to get some free stocks from Moomoo, the professional trading brokerage, check out the basically pinned comment down there to get your free stocks before they run out, okay? And make sure to subscribe to this channel if you're not already. But in this sort of market, guys, we're going to remain volatile because a lot of what we just went through, a lot of that stuff's not going away. The Fed meeting stuff will end, but then it will be about the next Fed thing and the next time Powell speaks and the next Fed meeting. And the Fed will kind of stay out there for a while. This is kind of a year where everybody's paying attention to the Fed. You're going to obviously have inflation, which we didn't even touch on, right? You have, I think most investors from the retail side have already headed for the exits, but that makes for a weird market now where it's like, okay, if retail's headed for the exits for the most part, okay, who's running this market now? Now it's just the big guys, and maybe that's the way big money wanted it. Maybe they wanted to get the retail to flood out of this. And look at the pricing activity. It's hard to say that retail didn't flood out of this baby like it was nobody's business this morning, right? And so, nonetheless, guys, yeah, we're in a drama show right now. We're in the hurricane, and we're getting battered right now. NASDAQ at its lows today, for instance, was already down 17% year to date, roughly. That's a epic move. I mean, we're 3 weeks into the year. That doesn't just happen. We as of this morning, we were on pace for the worst stock market in the history of Januaries in the history of the stock market. And if we just get a few more down days here, and meanwhile, we're about to go into massive earnings season. Tomorrow Microsoft comes out after the bell. The next day Tesla comes out after the bell, and the next day Apple comes out after the bell. So this baby is going to be shaking for a while, and so I'm making sure I get ammo situated and ready to rock and roll because I don't know where this thing's going to go short term. All I know is I want to be able to buy stocks I love. So, anyways, guys, hope you enjoyed this as always. Much love, and have a great day. Oh, I didn't hit the button. There we go.